Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw the sell side has been dominant, and at this point, yesterday's breakout attempt has technically already failed. So heading into the open, we are going to approach the market with a very mixed or neutral bias because the overnight bias is bearish, the larger time frame bias is still technically bullish, and short term, the market can really balance or eventually break down or break out. Like there's really not major edge one way or the other right now. If anything, we know that heading into the open, the sellers are more dominant and in control. And if this ends up being a bigger failure and we get a break below 75 quarter to 77 quarter, then we could be looking at a move down into the 66 half to 68 half area. So heading into the open, we do have to be very neutral with our short-term bias. Keep an eye on the underlying internals. Keep an eye on the other markets. In the S&P, keep an eye on the 2181 level. That was the overnight low until we had the economic reports come out at 7:30 a.m. Central Time, and now the market is probing below that area. So if it fails to hold below 2181, or if we aren't seeing any downside momentum, then we have to be cautious even on the short side. And if we are going to short the market, then we do still need to get somewhat decent trade location unless we're seeing some very clear-cut signs of strong downside momentum. So if there is no downside momentum, then the only edge that you're going to have is to rely on good location because the market might just continue to balance within a range. It may not really make a big move one way or the other. We're still running on fairly light volume. So like I said, heading into the open, you have to approach it with a very neutral bias and not really be leaning big one way or the other. On the downside, 75 quarter, 77 quarter is the first area of support. And if the market fails to hold that area, then it would be a bigger signal that the sellers are now taking over. And from there, we can easily test 72, 75, the naked VPOC and gap, and the 66 half to 68 half, where responsive buyers can still defend on first test. On the upside, in the event that we start seeing momentum coming back into the market, ES would have to take out 83 to 85 in order for the buyers to really start regaining control. So we're going to be using that 83 to 85 area as the micro bull bear that marks the upper edge of the current short-term balance area that the market tried to break out from yesterday and failed. So if we continue to hold below 83 to 85, or we just continue to struggle there, then it could result quite easily in a move down into initial support and then possibly even lower depending on the real-time situation, depending on how weak or strong the internals are in real time, depending on the real-time momentum situation on the NYSE tick. So right now, we are going to maintain that neutral bias, and then if initial support breaks, that would be a confirmation, and at that point the smaller time frame bias becomes bearish into last week's low at 66 half to 68 half, where, like I said, we can still technically get responsive buyers on first test simply because the market would be quite exhausted into it. And considering that we're running on fairly light volume, it's unlikely that we're just going to take out the 66 half to 68 half without at least getting some level of response there first. On the upside, in the event of a break through 83.85 and the 86 overnight high, we have resistance at 88.75 to 90.75, and in order to get any kind of sustained move higher, we are going to need to see broad market strength and participation from the Russell and the Nasdaq as well. So absent any strong buying, the initial resistance zone can still be an area that caps the upside or that really ends up being a decent hurdle in the market. So if we're not getting decent upside momentum, then 88.75 to 90.75 could be a place where we can look to short the market. And if we're not seeing any decent signs of strength, or if we're seeing outright weakness, then even this 83.85 and the 86 overnight high could end up being a spot to initiate a short. So right now, because our bias is neutral, we are open to trades in either direction, long or short, and we're really going to have to assess the environment and the situation in real time in order to determine whether it makes sense to short at that area or not. So those are really the main ideas heading into the open. Let's see which side really takes over off the open. Like I said, we are going to have to lean more on the real-time situation because short-term the bias is very neutral, and we can really just continue balancing in a range, or if initial support doesn't hold, then we could be looking at a bigger move lower. And right now, this is a failed breakout scenario that we're looking at. So, if anything, we have to be cautious now on the long side. So those are our main thoughts heading into the open. Let's see which side really takes over, and we'll take it from there.